The semiconductor industry is one of the most important and fastest growing spaces in the modern economy. With the ongoing chip shortage, these companies have massive demand and great margins. Yet one of the most profitable and iconic semiconductor stocks is trading at a PE ratio of just 10. This is while nearly all its peers trade at very high multiples. The Intel Corporation has a strong market position with growing free cash flow, dividends, and consistent share buybacks. The pessimism around the company stems from strong competition causing Intel to lose market share and the previous management's lack of focus on innovation. However, their new CEO Pat Gelsinger is an engineering-focused super nerd with a vision to bring Intel back to dominance. In this video, I'm going to provide a comprehensive overview of Intel's business and explain why I think it's a great value to add to your long-term dividend stock portfolio.
This symbol outside means you have the standard inside that an entire library of software has been written to. The Intel microprocessor. Think of it as a library card that lets you run the software of today and tomorrow. So check out Computers with Intel, the computer inside.
My name is Zach, and you should leave a like and subscribe to the channel if you enjoyed the video. You should only invest in businesses you fully understand, so today I'm going to provide a full picture look at Intel stock. First, let's recap the company's history. On July 18, 1968, Intel was founded by semiconductor pioneers Gordon Moore and Robert Noyce. The name Intel was chosen to stand for Integrated Electronics. Noyce is known for being the co-inventor of the integrated circuit, with his being the first to use silicon. Moore is best known for developing Moore's Law, which was an observation that the number of transistors in a dense integrated circuit doubles every 2 years. If you're into technology or studied engineering and computer science, then you should be aware of this concept. After incorporation, they soon hired their third employee, Andy Grove, who later became COO and CEO of the company. In 1971, Intel became a public company and raised $6.8 million via IPO. That year, they created the first commercially available microprocessor, the Intel 4004. This miniaturized the central processing unit of a computer, allowing small machines to perform calculations that previously only very large machines could do. This milestone and later innovations would fuel the development of the personal computer market. However, these microprocessors would not become the core of Intel's business until the mid-1980s. Originally, Intel's most profitable products were shift register memory and random access memory integrated circuits. They quickly became a leader in DRAM, SRAM, and ROM markets throughout the 70s. Once the personal computer revolution hit full steam, Intel CEO Andrew Grove dramatically redirected the company, closing much of its DRAM business and directing resources to the microprocessors business. This would grow to become the center of Intel, with later products such as the 386, 486, Pentium, and Intel Core processors. So what does their business look like today? Intel's largest business segment is the Client Computing Group. This includes processors designed for multiple PC formats such as desktops, laptops, 2-in-1s, and mobile computing. They've also branched out into adjacencies such as connectivity, graphics, and memory. If you go on Intel's website, you can browse and see all the different products they have to offer. This segment makes up 53% of Intel's revenue as of Q3 2021. It's been steadily growing revenue over the last 5 years and is a major source of Intel's intellectual property, manufacturing scale, and cash flow. The second largest segment of Intel's business is the Data Center Group. This aims to serve the demand for cloud computing by developing workload-optimized platforms for computing, storage, and network functions. Their customers are primarily cloud service providers, enterprise, government, and communication service providers. The product portfolio includes Intel Xeon Scalable processors for the data center, Intel Optane DC persistent memory, 800 series Ethernet adapters, and much more. This segment makes up 36% of Intel's revenue as of Q3 2021. It's a faster growing segment than Intel's Client Computing Group, with large growth opportunities in cloud, networking, AI, and data analytics. The data center total addressable market is expected to grow to approximately $90 billion by 2024. The third largest segment of Intel's business is the Internet of Things group. They design high-performance processors for computing devices embedded in everyday objects, connecting them to the internet and allowing them to send and receive data. This makes up 6% of their revenue as of Q3 2021. Customers include retailers, manufacturers, healthcare providers, energy companies, automakers, and governments. This has a large growth opportunity as more devices become connected and require computing capabilities. The fourth most noteworthy segment of Intel's business is Mobileye. This is sometimes included in the Internet of Things group, but Intel is actually planning to take this segment public in mid-2022 while maintaining majority ownership. Mobileye is the global leader in driving assistance and automation solutions. Their advanced driver assistance systems products form the building blocks for higher levels of autonomy. They have products for computer vision, machine learning-based sensing, data analysis, localization, mapping, and driving policy technology for autonomous driving. In my opinion, their tech is not nearly as good as Tesla. However, their chips and sensors will likely be included across a large segment of the automotive market. They already have technology included in BMW, Audi, Volkswagen, Nissan, Honda, General Motors, and more. Definitely a large market opportunity. The next two segments are less noteworthy but worth mentioning. The Non-Volatile Memory Solutions group makes memory and storage products based on Intel Optane and NAND technology. Customers include enterprise and cloud-based data centers and consumer desktops and laptops. The Programmable Solutions group makes programmable semiconductors for a broad range of markets, including communications, data center, industrial, and military. So that gives you a broad overview of Intel's current business. Now let's look at the competitive environment, the new CEO's plan for growth, and financials from the perspective of an investor. AMD is Intel's most direct competitor for PC CPUs. Over the decades, they've been competitive, but Intel has always been the top dog. Over the past few years, AMD has eaten into Intel's market share. They made faster desktop processors and won over a chunk of enthusiasts and gamers. This chart shows the distribution of Intel versus AMD x86 CPUs from 2012 to 2021. Intel has always been on top, but it's narrowed to roughly a 60-40 split. It has plateaued in 2021. However, if we zoom out and have a more segmented view, the picture becomes clearer. This chart determines CPU market share by looking at the performance test benchmark results. This is updated daily and offers a more detailed view. Intel and AMD have been in a similar scenario before. For all CPUs, if we look from 2004 to 2006, Intel and AMD were much closer, but Intel pulled away on top. Also, we have more recent data not available in the previous chart. We can see that more recently, Intel has actually started gaining ground on AMD again. If we look specifically at the desktop market share, you can see this is much closer. AMD actually briefly overtook Intel, but Intel has started to pull away again. This is actually quite similar to 2004 to 2006. From my research, it seems Intel has put out very high quality recent products and is beginning to win back some support among enthusiasts. The CPU market is very competitive and these companies will cycle trying to top each other's products. If we look at the laptop market share, Intel has been historically dominant and will likely continue to be, although there has been a slight increase by AMD. Intel completely dominates the server market share according to this data. Another source of competition is innovation in new markets. For example, GPUs have become increasingly important to the future of computing. These can process many pieces of data simultaneously, making them very useful for machine learning, video editing, and gaming applications. NVIDIA has taken a dominant position in this space, and AMD is a distant second. Intel has missed the ball here and took forever to move from their integrated graphics to a discrete graphics offering. Luckily, the new CEO has shown interest in competing in discrete GPUs as part of his mission to lead across the industry. Intel is launching their Intel Arc GPU, which will release in 2022. It will be available in desktops, add-in cards, notebook form factors, and already has a partnership with 50 OEMs such as Acer, Asus, Alienware, Dell, Lenovo, HP, and more. I'm sure it will take a while for Intel to get established in the GPU space, but the massive demand and market opportunity are too big to pass up. Another missed opportunity for Intel was the mobile market for smartphones. They dropped the ball here and were never able to capture the market despite futile attempts. Recent negative news was that Intel lost Apple as a customer for their laptops and desktops. Apple has decided to design their own chips so that they have full vertical integration between their software and hardware. These are the Apple M1 chips, which have been awesome. Now Apple designs its chips, but they're manufactured by Taiwan Semiconductor via their foundry service. This is where chip manufacturers create and assemble chips designed by other parties. This is actually TSMC's entire business model, and they're quite successful at it. Losing Apple's business is a huge loss, as they're one of the largest consumer electronics companies. However, Intel's new CEO has a plan to win this back. Intel will begin its own foundry services, leveraging its existing capabilities to manufacture chips for others. I'll talk more about this later, but it's pretty exciting. If Intel ensures quality and affordability, then they could win back Apple's business. Plus, the American-based supply chain could be a nice selling point. With all this talk about competition, it's important to keep in mind that semiconductors are a growing industry and there's currently a shortage. Chip demand is high and supply will be increasing well into the future. On January 13th, 2021, Intel announced that Pat Gelsinger would be the new CEO. Let's introduce the man and dive into his vision for Intel. Gelsinger is an engineer who worked for Intel for over 30 years. He was a prodigy who started at the company when he was 18 and climbed up the ladder. He worked on the 386 processor and was the architect of the 486, which later evolved into the Pentium processor. At age 32, he became the youngest vice president in the history of Intel. Pat was personally mentored by former Intel CEO Andrew Grove and became the first CTO of the company in 2001. At this position, he led technology developments in Wi-Fi, USB, Intel Core, and Intel Xeon processors, and the move to 14nm chips. That is quite the resume. However, he left Intel in 2009 and became the CEO of VMware in 2012. This period away from Intel gave him experience in software and cloud computing, as they became the first commercially successful company to virtualize the x86 architecture. In research for this video, I watched many of Gelsinger's interviews and presentations. This guy is just awesome. He's a pure technology-focused nerd, and it's great. He also loves Intel. Listening to him, you can just tell that this is his dream job. He seems possessed, like a man on a mission. I imagine his energy has to be contagious throughout the company. Do yourself a favor and listen to a few interviews with him. I would not bet against this man. Soon after becoming CEO, he announced his plan for bringing Intel back to leading the industry. First off, the company will be product obsessed and strive to lead the pack in innovation. The company will be joining the foundry model and building 2 new $20 billion fabrication plants in Arizona. These will manufacture chips for global partners. On top of this, they are doing a $3.5 billion upgrade to their plant in New Mexico. This is just the beginning too. Intel plans to be the major provider of foundry capacity in the US and Europe. Legislation like the recent CHIPS Act helps provide tax relief, allowing semiconductor companies like Intel to compete globally. The company is likely to continue this aggressive investing strategy. Gelsinger has stated he plans for Intel to catch up to TSMC and Samsung within the next 5 years. With almost 1 year as CEO, the company has already started making progress. The 2 new fabrication plants are under construction and 3 months ahead of schedule. They were selected by the US government to provide commercial foundry services for the government's RAMP-C program. Amazon was announced as the first customer to use Intel Foundry packaging services. Also, a partnership with Qualcomm was announced to use the future Intel 20A process technology. They launched Alder Lake, which is their next generation architecture, and they are soon releasing their Arc GPUs. Honestly, so much stuff is on the horizon and too much to include in this video. Perhaps the most important change is their new emphasis on software. Gelsinger brought his CTO from VMware over to be the CTO of Intel. They claim all their new products are designed with a developer-first approach. They now have a unified developer zone that provides documentation and tools across the entire Intel ecosystem. They're also launching Intel One API, which is not only for Intel products, but is an open source developer ecosystem that can support any CPU, GPU, etc. This is designed for the whole industry and is not proprietary. They've already partnered with 11 new research centers at higher education institutions to help drive the adoption of One API. This is likely only the start. Intel is run by nerds again. It's product and developer focused. However, all this new investment will lower short-term financial performance. Recently, Intel gave an unexpected long-range forecast saying it expects at least $74 billion in revenue in 2022, higher than analyst estimates of $73 billion. But the company also plans to spend heavily, saying capital expenditures could reach $25 billion to $28 billion in 2022 and rise in the subsequent years. On top of this, they expect gross profit margins are likely to be between 51 and 53% in the next 2 to 3 years. This is below analyst estimates. Gelsinger said the main reason was Intel's ambitious plans to introduce several new generations of chip-making technology by 2025. All new generations of chip-making technology tend to be less efficient in their early phases, becoming more profitable as chipmakers perfect their processes. Luckily, Intel is starting from a great place financially and operating in a beneficial environment where semiconductors are in high demand. Let's take a deep dive into its financial metrics. To do so, I'm going to be using my own research software at dividenddata.com. You can join the free beta test period, which is available to the public now. We can see the company is currently valued at $217 billion with 4 billion shares outstanding, giving it a price per share of $53.44. We can see the non-GAAP earnings per share have been consistently growing, especially over the last few years. If we look at the revenue, you can see its revenue per share is growing at a 9% 10-year compound annual growth rate. Over the last 3 years, the compound annual growth rate is 11.58%. Net income per share is growing at a 9.2% 10-year compound annual growth rate. Over the last 5 years, it's grown at a 15.63% CAGR. The free cash flow per share is growing at a 9.2% 10-year compound annual growth rate. Over the last 3 years, it's been over 30%. If we look at the annual chart, we can see the fiscal year 2020 marked huge gains and an 8.99% free cash flow yield based on cost. It's important to note that the company will be investing heavily over the next few years, which will lower the short-term growth. However, this is a great starting place. The margins are pretty good. Last quarter, they posted a 55% gross margin and a 35% net margin. On an annual basis, they posted a 56% gross margin in 2020 with a 26.8% net margin. So again, the company is financially killing it right now and using this as a time to invest in future growth. The chip shortage is ongoing and the demand is quite high. They have solid shareholder equity and their debt is not crazy given their income. Also, Intel has a very shareholder-friendly management. They've been buying back shares consistently for decades. Over the last decade, they've bought back around 1 to 5% of their shares every year. From 1997 to Q3 2021, they've gone from 7.18 billion to 4.08 billion shares outstanding. That's over a 43% reduction in share count. This means that the relative value of each share is increasing. So as a shareholder, your ownership in the company is increasing without you doing anything. On top of this, Intel pays a consistently growing dividend. Over the last 10 years, the compound annual growth rate of the dividend is 5.18%. They've been doing these consistent increases on an annual basis. The current yield on cost is 2.6%. The payout ratio is 26%, and their free cash flow has been growing faster than their dividend. This means the company is well positioned to continue growing its dividend well into the future. All of Intel's financials look mostly positive. With that said, valuation matters. The company is valued at a PE ratio of 10.3 over the trailing 12 months. This is historically cheap, especially considering the recent growth rates the company has been experiencing. Why is it so cheap? As I said, the company has a lot of pessimism around it since they've been losing market share. Plus, all this new investment and business direction will suppress short-term earnings. Also, many analysts are factoring in the risk of these new investments not succeeding. With all that said, I think Intel is grossly undervalued. In my opinion, there is a real chance Intel will provide the best investment returns of all the semiconductor companies over the next decade. This is because valuation matters. All you have to do is look at Intel's history. During the dot-com bubble, the stock was $73 and they didn't have the financials to back it up. The next decade was completely lost for investors, even though the company would succeed long term. When looking at Intel's competition, I'm very turned off by their valuations. AMD has a PE of 40, while it has a terrible track record of profitability. It's also increasing share count dramatically and pays no dividend because it's unable to even sustain one. Nvidia is a great company, fantastic company, and I'd definitely buy it over AMD, but still has a PE of 84. Even though it's expected to have high growth, this company is priced for perfection. It's going to be difficult for these companies to outperform their valuation. Taiwan Semiconductor is the most compelling, but Intel is 1/3 the valuation and is mounting an effort to compete with them on their foundry business. In conclusion, I think Intel is undervalued and the new management has an opportunity to make it a leader again in the semiconductor industry. I haven't bought any stock yet, but am planning to open a position in the near future. However, don't take my advice blindly and be sure to do your own research before making any investment decisions. I am not an expert on the semiconductor industry. This is just based on the research I did for the video. Thank you for watching Dividend Data. I'd greatly appreciate if you could leave a like and subscribe to the channel. If you follow me on Twitter, link in the description, you can get real-time updates of my buys and dividends coming in. You can support the channel over on Patreon, where you can gain access to a community Discord server. The link is in the description. Please leave a comment below, and thank you for watching.